So, as the markets continue to tumble another 600 points, a lot of people are asking, what is this thing that people talk about, the VIX? And we're going to be talking today about what the VIX volatility index is, what it's been recently doing, why it's important, and how you guys can actually profit using the index to basically know what on earth it is. And I got my lovely partner with us today, so we're going to be talking about the VIX. We're also going to be talking about what the hell happened with the market and what that beautiful word, tariffs, are going to be. You know, the most beautiful word in the English dictionary, as one would say. But enough about that. What is the volatility index? Well, simply put, the volatility index is how people feel about the markets in the most simplest layman's terms. Essentially, think of it, your house is on fire. I know this is very dramatic, and I'm selling you fire insurance on that burning house. And a couple days ago, I was selling that fire insurance to you for $15 per room, whereas today I'm selling it more expensively at $22, right? Not a huge difference between the two, but significantly cheaper when it was a couple days ago. Essentially, the VIX is what everyone runs to get collateral to basically offset their losses. It's also highly correlated with the bond market. We're not going to get, option market. We're not going to dive into the whole option market. Think of it as like a multiplier. The higher the VIX, the more you have to pay for protection, the higher option premiums are, so therefore higher prices on options across the board, whether it's a call or a put. But that's what we're going to get into later on, way later on. But the VIX essentially is the oh crap index. And it has been doing nothing but going up, and more up in the markets. And the markets have been going down, right? We got that one red day of reprieve on the VIX. And then subsequently, the market basically said, hallelujah, time to go to new all-time highs or 52-week highs, and closing at 22.78. Why is this bad? Because usually anything above 20 is everyone's running for the hills, especially when, question for you, how long are we going to stay in this bloody dang fear? Because
remember that I said during the weekend deep, yeah, that's right. I'm going to just pour salt into the wound with lemon juice as well. I said that we're probably going to be at around extreme fear and fear. You said we're going to be smack dead 50.
Yeah.
It looks like I'm being proven right. Now, we still have like 4 more days, right? And on top of that, we have Costco, we have AVGO, we have tariff stuff that's happening. We have job numbers. You know, we have all that stuff happening this week. So we could still end in neutral, but so far, one day gone, I am correct. So far.
I'm going to be gloating to the bank when this thing cranks up to extreme greed, which is ironically where we were a year ago, right? Almost a year ago, we were at extreme greed on the market. So it was just hilarious how the tables have turned, right? You know, and
the turns have tabled.
Yeah, the turns have tabled. I like that. But what was the main reason for this tumble? Right, the stock market was already discounted pretty heavily. I don't know if you all saw Nvidia stock and or AVG or any semi. Pick a semi.
Just choose the semiconductors index at that point. Because
we can actually do that. Yeah, speaking of the devil, we can actually do this. So tell me, how much everyone was complaining, right? So everyone was complaining about when the semis were over in this region of how expensive they are. And then in this region, they were like, I missed the rally. And now life is giving you an opportunity to buy this even darn cheaper. You have to go all the way back to August 5th. Coincidentally, the last time we were in this extreme amount of fear at 17 back then. And the VIX was also when the dollar yen trade. If you guys don't know what that is, it's basically shorting one currency and longing another. I'm not going to get into it.
Oh, that's when the thing happened.
Yeah,
that's when the
dollar yen.
When
that's
the
when the
scandal
dollar
happened.
yen, the carry trade, as it was called, was completely unraveling. And subsequently, we just went to new all-time highs afterwards. But, you know, it's just, this time is different. Said everyone in the goddamn world. But
well, it's not just, here's the thing too, it's not just chips. It's basically majority of information technology. I do believe that Microsoft is still sub 400.
Yeah, Microsoft got like hammered. the thing got absolutely just hammer double low, right? So this is where things start to be a little more interesting. Double low on Microsoft. I do want to cover real quick what happened to Nvidia. When everyone complains that they missed 113, congratulations, you got 112 today. So
don't complain.
When
don't
Nvidia
complain
is $200 in the next quarter, don't complain. We will scar you for life for complaints for that.
We've even been talking privately that this is very, very similar to a Meta scenario where Meta fell from like 400 down to sub 90. I'm over here looking. Oh, look at that. It's a W pattern. I'm over here looking at Meta when it comes. What was that?
Not confirmed yet, but going. Let's pull up.
I was just looking at Meta. Hang on a minute. I was just looking at Meta and their fundamentals, and the discounted free cash flow clearly said that it should be worth like 600. Look at Meta's stock price right now. It's like 800.
Yeah, everyone was basically saying, just for a little bit of context, when Meta had this massive drop, right? From that point on, it was basically bad news for almost half a year, right? It was half a year of very, very like negative press coverage about everything, especially with a lot of like this GDP coverage that we're seeing now. We're seeing with semiconductors. We also had TSMC today come out and basically say, hey, that $1 billion rumor or $100 billion rumor that we're investing in the United States and everything, that's real, right? So
that's real. Yep.
So essentially, like Meta did everything. And again, like talking about Meta, right? You've had so many opportunities to buy this thing super, super cheap in this region right here. Everyone was complaining when they did their earnings that, oh, I'm never going to be able to buy Meta again. And here you are again, coming down to the 50-day moving average. Excellent buying opportunity, especially if you're doing options. Like the premiums are jacked to no end tomorrow. But I do want to point out why the fear is maybe a little overblown. Going back to the VIX, right? So 30 is really the line that is the, oh crap, everything is truly on fire. So when the whole world was burning down, aka like if we go back to when VIX had a temper tantrum, COVID, right? So COVID here, we can see VIX 85 to basically the oh crap territory of 40. So let's go to a little bit more recent memory, because remember COVID for a reason. We're going to be talking about COVID for a particular reason. I want you guys to keep and remember that particular time frame. And then the carry yen trade, when essentially VIX was basically ripping and roaring all the way to 64 and came back down to close at 35, and then subsequently we basically just chugged along 26% to new all-time highs. And now, right, the same people that were telling you the world is burning are saying the world is burning now. I like to call a little bit BS on that. And why is everyone super, super scared, right? I want you all to remember what happened in 2018, 2019, let's show you 2017, when the trade war was going around. We just kept hitting new all-time highs. No one cared. No one cared when the trade war was going on in 2017, 2018, 2019. It was just basically bye, bye, bye. So, having said that, we can look to what's going on now in the markets and kind of like see what is going on with S&P after it basically just shed. I mean, this thing was down 2% at one point, and after hours down 1.4% if you level out the day. But again, with the markets basically shedding this much, it is the natural question, is this a buying opportunity? We're going to dissect why the narrative is actually incorrect. And let's start off with the biggest market in the world, which is the bond market, right? So everyone's telling you tariffs are inflationary. Considering we had the lowest inflation in living memory during that trade war of 2017, I'm calling BS on that. But let's take a look at the bond market, right? Don't believe what I say. Don't believe what anyone says. Let's look at what the biggest market in history is telling us, that inflation is magically coming back, but yet bond premiums are basically falling off a cliff, making lower lows as the market's making lower lows. So one of these two.
And for reference, let's preface this. When yields go down, this means that prices are going up when it comes to bonds. So they're inversely proportional, meaning that if yields are falling, prices are rising, people are buying into bonds. So basically, all of these sell-offs that we're having in the normal stock market, it's just basically a transition of or money from the stock market into the bond market, which is causing then the yields to fall.
Yeah, and it's also, remember, like the Fed made the 20-year basically do this, right? Just to give you guys a little bit of memory of our memory hole, what the Fed did to the bond market, right? So when people are buying bonds, they're basically saying, I want a bigger capital return, and I'm not going to be losing any money based on like what they project inflation to be at. But yet, we're being told tariffs equal inflation. And it's really, really funny how that all is playing out, considering TLT finally forming that, like maybe bottoming in this area, trying to get back above the 200-day moving average. And it is very, very interesting to see that majority of the indexes, especially the NASDAQ, coming down to key support, actually closing within a couple cents of the weekly. We actually have a failed weekly breakdown, and thus possible reversal coming around here. We have to see if we close above 496.93. And I also want to bring your attention to this massive amount of volume that is forming here. This is traditional, like the capitulation phase of the volume, where everyone is just screaming bloody murder at this point. I know some people that are watching this video are probably feeling the pain, right? Looking at your portfolio is not the most prettiest thing in the world. And
I love it.
Oh, yeah. For those that understand what's happening and have an understanding, looking at VIX, that it's not spiking above 30, while, right, if you told me, and I feel like this is becoming the trend recently, that if you told me X, Y, and Z, that I wouldn't believe you. If you told me that we were going to get a negative 2.8 print on GDP.
Well, projected print. Projected. Right? It's not the official, but it's from the Atlanta Fed, and it does have, it does have some weight to it.
It's the leading indicator for the, how to put this? It's the leading indicator for the the GDP that normally comes around. It's also the Fed's preferred like GDP metric that's forward-looking.
Right.
It's revised weekly. It was revised from negative 1.5 to negative 2.8. So that would mean a 4% contraction.
And on top of that, if you click on it and you see the overall chart, this is why, I mean, you were even telling me about this, how it's almost unbelievable that this is actually occurring, because we just went from 2.3, look at that. We just went from 2.3 in February 19th, right? All the way down to negative 1.5. That massive swing just from like that's not how it happens. You usually have like a degradation. It's not just like a one fell swoop.
Yeah,
so
the funny thing is, the last time we had this was COVID.
Interesting.
But what was happening during COVID? Mass layoffs, mass shutting down of businesses. The whole economy went to hell. I can explain maybe why that we're getting this earlier projection. And it's kind of a little funny because everyone complains about government spending, and how we kind of talked about on this channel for quite amount of time that government is propping up GDP numbers. Their spending is propping. So now that we're cutting
job numbers specifically,
but it's also their spending, right? The government spending and influxing of money into the economy was increasing the gross domestic product. So now that we've cut all this wasteful spending, now we're kind of seeing the fruits of the labor of the contractionary phase of the economy. Do I think it's to this extent? No, I think the number is completely overstated to get a particular reaction out of the markets. Case in point, the bond, looking how the bond market is, everyone looking at junk bond demand, and how tariffs that have been overly communicated to investors, you're just picking what you want to make the narrative. If you told me that, because there was also another article about like when the TSMC article came out that we're going to invest $100 billion. NVIDIA also had a thing where secondary resellers are bypassing the NVIDIA chip restrictions to basically they're buying NVIDIA chips illegally and then they're reselling it to China, which is basically has chip restrictions. So NVIDIA can't directly sell. So everyone's like freaking out. The US government is magically going to stop NVIDIA from selling chips. I'm like, Where there is a will, there is a way to get around any government regulation, loophole, whatever. We've seen this with like the countless industries, right? So when everyone's saying AI is dead, but yet we're investing $100 billion in US AI, and who does TSMC mainly sell their chips to? AVGO and NVIDIA. Oh,
AVGO, NVIDIA, AMD as well. Yeah.
Let's just make it even more fun. Kind of your thing about Intel and the Foundry. Mm-hmm. Now it's going to be the Foundry for NVIDIA and AVGO. There's rumors that Intel is going to be their premier chip supplier in the United States.
Good.
So it's like
good.
So
that's exactly what I was hoping for.
Who can we buy chips from that's not in Taiwan? Hey, Intel.
Hey, that's exactly what I was hoping for. I'm like, yo, Intel is the only one that has a foundry.
Intel finally dug itself out of the ditch that it's been in.
Intel, I've been saying it for almost like a year and a half now. Intel needs to lean on the moneymaker, and right now, that is the manufacturing of actual chips. Not the IP, but the actual manufacturing of the physical chip making, wafer making chip, not the IP. There's unfortunately, they got left in the dust on that one. But, you know, what? They'll become basically like Airbus and Boeing, a duopoly, TSM and Intel Foundry. That's it, because there's only two of them.
They realized, they were like, we can't compete with all these guys. But what do they need? What will they need in the future? Oh, a US-based foundry, because they kind of saw they didn't miss the forest for the tree. And they're like, eventually, having all your chips in this one basket over across the ocean is not a financially stable idea.
No, it's not. It's like during the gold rush. The people who made the real money weren't the people who went out to go get gold. It was the people selling the shovels and the pickaxes.
Yes.
You know, exactly. So it's like yeah, Intel, great, you have chips, but unfortunately you guys got left in the dust. However, guess what? Those chips need to be made. So focus on that.
Yeah, like you built an entire business model and then pitched like the other side of your business. Anyway, now going down the rabbit hole of Intel. When do you think this number is actually going to get revised positive? Because I'm like, we got plenty of March publications, right, as everything, because it's like, watch they go back and they're like, oh, sorry, we put a negative when we should have put a positive by accident.
That would be insane. That would be absolutely bonkers. That would be absolutely bonkers. And honestly, I could see it. I could see it happen. Stranger things have happened.
It's the government. They screw up everything.
It's not even the government. It's the Fed. It's even worse.
Yeah, that's true. That's true.
It's the Fed. It's even worse.
Funny thing, speaking of the Fed, right? Let's talk about the December rate cuts expectations. We're back to 3 rate cuts again. So now the odds are starting to grow for the 4 rate cuts, right? 4.0 and 5 and 6 are starting to kind of be in the picture, which is the coincidental thing. It's like, we're going to cut government spending, force GDP to go negative. What is the Fed going to have to do? The Fed kind of, if that number is real, again, they get all this data. What is Jerome Powell going to say on Friday, right? Because this is definitely going to... Ooh. We have a Friday print for this. Or, sorry, a Thursday print for this.
March 6th.
Yeah, the 6th. You get 2 prints per week. You get the Monday and then the Thursday revision. So wouldn't it be funny? It's like, oh yeah. Right before Jerome Powell is going to talk on Friday. Oh, sorry, we meant to it's actually this. Because
that would be then you could see markets just skyrocketing, and people will be like, I missed the rally, I missed the buying points. It's like, yeah, man.
Oh my, they would do, I don't 7% in one day, like
probably.
The amount of fear that's been stoked. I'm like, the thing that's the first bullish inclination, right? The second that rate cuts come back into the picture, I mean, it's going to be the most insane thing ever. And it's funny, right? It's like rates are coming down while the Fed is not doing anything. They're just like, they're always late to the party. And it's like now because of everything like GDP numbers and all this and like tariffs and that, it's like they kind of have to swallow their pride and be like, yeah, we have to cut rates even though we're saying tariffs are inflationary, right? I love how they also took the line of, Well, we'll see how the data comes out, right? Leaving both doors open and considering the data is basically slapping them in the face right now. Here, I'm like, 5 rate cuts, 6 rate cuts, because the funny thing is, like, I look at this, I'm like, everyone's selling everything off. They're basically like, who bought and all this stuff that's horrifically wrong, right? But yet, if you scroll down on this, right, like, just look. Extreme fear, extreme fear, extreme fear, extreme fear, extreme fear. Extremes in markets don't last. Period. Bullish or bearish. .com, '08, COVID, right? All those things didn't last very long. They lasted, but they didn't last very long. They're not permanent lows.
I mean, last decade, don't get me wrong on that one.
But like magnified, like, and those things didn't happen in one day. They didn't happen in one. They were steadily, like, progressively getting worse and worse and worse and worse. But notice how, like, junk bond demand. Again, I always talk about go back to the bond market. The bond market will tell you the truth. Junk bond demand basically at extreme greed. So the narrative is starting to have cracks. And why I still think that this sink in the stock market is basically the ultimate buying opportunity that everyone's going to miss out. And the FOMO rally that will subsequently occur afterwards is going to be absolutely mind-boggling. Like, it's going to be a hold my beer moment for 2023, 2024, like, where we saw some of the, and I mean, we saw some crazy rallies. Just look at what happened in August, right? Like, just looking back at August right here, look what it led to then, right? We just basically never stopped going, right? We basically went 21% in a matter of from July to the end of the year. And then, 2025 rolls around, it's light switch time, as someone would say on this channel. And essentially it's like, okay, we come back down to strong support, right? So, like, we got a lot of similarities between now and August. And it's like strong support in August, bounce. Strong support in August,
bounce.
Or not August, March. It's like
March.
It's like
bounce? Question mark? Maybe.
Yeah, it's like the natural question of, like, what's gonna keep making markets go down, especially, like, you got the State of the Union today, so we're gonna see what.
Oh, is it really?
Yeah, so we're gonna have State of the Union today on Tuesday, so it's gonna be basically Trump's gonna come out, and he's basically teased it already on Truth Social that you guys are gonna like it and all this, and also, like, various different things, most likely going to be talking about tax relief and all this stuff, and, like, all various different things.
Yeah, that'd be great.
So it's going to be very interesting to see what happens. So if you guys wouldn't mind, we'll have the latest Weekend Deep Dive video linked over here, so you guys can check that out to know exactly what the levels that we talked about in this video, along with where we need to be rotating and why this latest rotation in the market isn't as bad as everyone thought. And with that, guys, make sure you guys are subscribed, hit the like button down below, and we'll see you guys in the next one.